Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Asian markets, as of now, what you're looking at, they are sliding in today's trading session.
The bank nifty resistance, similarly, is the 61.8% retracement, which we almost got to on Tuesday.
A short squeeze holds the key today, whether or not we can end virtually at the day's high.
I think having these kinds of tariffs on China and US on China on US and US and China is untenable.
I have not seen any major panic. There have been some industries where it's been difficult.
1.5 higher on the Nifty is what you have. The Nifty bank is up about 1%.
On a relative basis, it was a possibility that you could actually be gainers.
The sensex has surged 1,200 points. The Nifty is above 22,800.
The significant volatility that we saw in the equity indices, there's been a clear moderation as far as flows are concerned.
It's construction and materials. We are up 1.3%, followed by basic resources.
450 points higher on the Nifty, marginally off the highs of the day, if you could call it that, still around that 22,850, 22,900 levels.
Well, so far so good. We're off the highs by a little bit, but broadly this Friday, things are looking pretty solid. Markets are up and up in a strong fashion. So that bounce is very much still there. I'm Prashant. With me, my colleague Surabhi and Rima here in the studios. Nigel is joining us from the newsroom floor. And of course, we're coming to you from the CNBC-TV18 Motilal Oswal studios. Guys, good afternoon.
Thank God it's Friday. That's all I'll say.
TGIF, guys. That's the word.
Because those numbers, beyond a point, they stop making sense. I think while I walked into the studio, now it's 125% tariff, which China is levied on US. So US is still higher at 145, right? It's like really two kids brawling in class. Reminds me of school.
They can make it 500% because there's not going to be any trade. So what are you going to tariff, right? But it's just posturing. China doesn't want to appear weak. That's it. Otherwise, 125% tariffs.
145%, 125%.
So you can keep throwing those numbers out. But I think eventually, hopefully, they'll also start talking. I think either both the guys are waiting for the other guy to pick up the phone and call.
Like who's going to blink first?
So I don't know.
Which is why I'm saying two boys brawling in school. At some point, the teacher has to come and say, stop it.
Who's the teacher?
I don't know. That's the thing. Maybe Nigel has some thoughts.
No. But in the next 9 days, guys, the good news is you're going to be working only for 3 days. So
I knew that was coming.
Six holidays. So,
Best piece of analysis this Friday.
I think this general cheer that we have on screen is not so much the market bouncing; it is the fact that
but Prashant, to be fair, the whole of last weekend, people were rooming circuit limits for the Nifty. We're trying to see the last time we went down. All those comparisons, you've done quite well. We're flat for the week. I don't think you could ask for more.
I just looked at Nigel. I just looked at where we are compared to 1st of April. The Nifty is down just 500 points. So it's actually been an absolutely phenomenal ride if you just go back and look at the last 6-7 days. But point to point, I think we've of course come out pretty stock-wise, and I think you'll have to dig deeper. But at least at a Nifty level, 500 is nothing with what markets around the world, etc., have seen. So it's looking very, very good. So 22,786 is where we're at, 1.7% lower, about 388 points higher. By the way, I just looked at the sort of resistance numbers we put out in the morning. We hit the 22,806 level. The high is 22,900 plus today. And that is basically the 50% retracement of the fall that we saw, the last fall that we had. And then we are now under it. So just under that 50% retracement. For the Nifty bank, we kind of took out the first, the 61.8% retracement, which we already did last Tuesday before and then of course the markets sold off a little bit. The number for the Nifty bank is 52,063, which is the swing high. So that is, again, not very far away, given the overall scheme of things. So we'll see how things progress from here. Prima.
Well, what a week it's been, right? A wild, wild ride for the markets. But here's the tally at the end of it. The Nifty, the mid-cap index, is down close to about 0.5%. Week to date, metals has been the biggest casualty. The Nifty metal index is down more than 3%. IT is down close to about 3%. And even today, in the recovery, TCS and Infosys, both of them are not participating. Infi, TCS, at last count, are down in the red. Not by a whole lot, but they're in the red. Realty has been a big loser. The Nifty Realty Index is down 4.2%. And the only sectoral gainer worth mentioning this week is the FMCG. The Nifty FMCG Index is up more than 3%. So top honors there. And individual stocks, it's Britannia with a 6.5% up move. HUL, 5%. These are all gains from last week to this week. So week to date, 3-4 days of trading. You've got a Titan, Nestle. These are stocks with gains of about 4, 5, 6%. So top honors here.
No, absolutely. I mean, it has been a very, very steady week given everything that was thrown at the market. It's not too bad at all. If I talk about some of the mid-cap and small-cap gainers, because even that part of the market is fairly stable right now. PI Industries, and we'll talk about this stock. So the market has already started sifting through, looking for pockets of potential opportunity, and that explains the move on PI Industries today. What are these changing global supply dynamics? What will they mean for some of the Indian exporters? Can they stand to benefit? That's exactly what's playing out on PI as we speak. Some of the pharma names like Suven and Wockhardt, they're actually doing really well. Though this whole issue of pharma tariffs, who knows what's the last word on it. But for the time being, it's looking good. Sirma, stock like Sirma, again, I think the market's trying to now decipher between where the opportunity lies. Even in disruption, there's opportunity. And for some of the Indian companies, perhaps EMS or pharmaceuticals or chemicals, perhaps there could be some market share gains to win if this China versus US continues the way it is. So that's how some of these stocks are playing out. But having said that, guys, I just want to point out on the mutual fund data, and we'll pull up the flows tally in just a bit. The flows for this month, March, they are just about 25,000, which is not bad, which is okay. We were at around 29,000 in February. And the SIP number is fine. But from a peak of 41,000, 40,000 around Diwali, Nigel, it has come down to 25,000. There's no taking away from the fact. The retail investor is resilient, but his patience has been, there we go. This is what I'm talking about. So December was 41, and even October, November, we were at 40,000 crores every month. Now that net inflow is down to 25,000. So, yeah, nerves getting tested.
Well, indeed, Surbhi, you pointed that out. Well, let's get in Mitesh Thakkar to help us out with what's the trade on the index. Hi, Mitesh. Good afternoon, and good to see you win. It's been a good trading session, actually. If someone told you that the Nifty is going to be 400 points higher getting into the last hour of trade, I think you'll take that. But that 20 DMA and the 50 DMA still remains elusive. Well, what would you do?
Yeah. So, Nigel, I think, a good session. My only worry is that, we kind of slightly tapered off below the 22,800 mark, which is what I was hoping that the index will hold. But I think otherwise it's a good session, and the good thing is that it will kind of arrested the negative signals. Now, a close about 22,800 will definitely add to the positive strength, which is what I'm hoping for, and we're not very far from that. It could still happen. But just hoping that, we do it faster so that then we can possibly be looking at 23,100 as the first target, and then possibly 23,354 zone as the next target. So positive stance on the Nifty, waiting for the index to either break above 22,800 and close above it, or get an entry around 22,650. So that's the way we are positioning ourselves on the index.
All right. What about individual stocks, Mitesh?
So I have a buy on IDFC First Bank. I think that was a call given earlier as well, but still remains very strong and gives you a good entry opportunity. That's a buy with a stop just below levels of around 58.5. Look for a target of around 63 to about 64 on the upside. While on the sell side is Phoenix Limited. I think slightly tapered out below the earliest pivot levels of 15.10, 15.15. So keep a stop at about 15.10. Look for a target of around 14.15 on the downside.
Got that. PI Industries is a big mover, 10% up. Vamakshi is here to tell us the tariff impact or the relief that it's seeing right now.
Well, absolutely, Rima. The US has gone ahead and imposed a 90-day pause on its reciprocal tariffs. The baseline tariff is at 10%, so it is much lower as compared to the 26% reciprocal tariff that it had imposed on India earlier. And a big beneficiary of this is PI Industries. Why is that so? Because exports as a percentage of its total revenue is a major contributor. It stands at 83% as compared to 17% domestic. Apart from that, within exports itself, North America is a very big market for the company. It comprises of almost 44% of its revenue if we look at it on an FY24 basis. Apart from that, there's also a note that has come in from Investec. They have a buy rating target price of 4,170 rupees per share on this counter. And they say that US-China tariff escalations, wherein US has raised tariffs to 145%, and similarly there are retaliatory tariffs coming in from China as well, will increase the cost of imports from China. This in turn will give a competitive edge to some of the agrochemical manufacturers in some other countries. Apart from that, there were concerns on Chinese generic competition for pyroxasulfone post-patent expiry in calendar year 25, and these appear to now be mitigated in Investec's opinion. Apart from that, PI enjoys, patent protection in most major markets, and therefore it is largely shielded from any Chinese dumping that could take place. Moreover, the de-risking from China may also gain momentum, and in this entire scenario, PI Industries stands to benefit. So therefore, given those factors, PI Industries is surging in trade.
Okay, very, very interesting. And thanks for pointing this out, Vamakshi. Very clearly, PI Industries getting investors excited with the prospects going forward. Let's take this up with our experts and talk about it. I think before that, we actually have Vinny as well. Do we have her? Okay, I think we'll go to Vinny as well, because Vinny is doing a similar analysis on pharma stocks and what's behind perhaps today's surge. Prakash Diwan is with us. Prakash, afternoon. Great to have you on as always. PI Industries, imagine these stocks, chemical stocks, they've anyway been broken down, beaten and bruised for the past many years because the chemical cycle went into a downward spiral. But now I think investors are looking at them with a new set of eyes for obvious reasons. What would your thoughts be?
Good afternoon, Surbi. So I think primarily the reason to look at these stocks is that they are available at absolute bottom prices. The reason why they fell was, of course, different. PI had a lot of issues with one of its largest Japanese clients. The product line that they have an overlap on went through a little bit of a reset. But this particular disruption that's happening is very similar to the emergence of China +1 after COVID. So that time it was COVID as a trigger. Today you have tariffs as a trigger. Now, we can't take this for granted for sure that India will continue to be at 26%. Or at 10% if you're more optimistic. But the key is that people will reinvent the supply chains. There's absolutely no doubt. And the emergence of some of these larger players who are exporting to the US is actually much more favorable this time around because of the acceptance or reliability and dependability of supplies from India. I think PI industry is just a case in point. You'll probably have a whole slew of smaller to mid-sized companies also participating in it after the large ones benefit. I spoke to one of the exporters of specialty chemicals out of Gujarat the other day, and just trying to figure out what's the impact on profitability and margins. And they actually said that the buyers are willing to take a little bit of that, partly share the impact of tariffs, and hence keep getting things from India. So yes, you're right. It's working well in favor of most of these companies. You'll probably see more names come in. It could be Aarti next. It could be at some point, the exporters, SRF, and all of them don't have so much of export, but a lot of the China substitution will probably benefit from this. And those are, mind you, slightly mid-sized companies in the chemical space, not very large.
No, absolutely. Got that. Pharma is the other space, right? I mean, names like Sun, Biocon, Cipla are buzzing. Vinny's here with a quick roundup of what's happening, what's keeping these excited. Vinny, over to you.
Afternoon, yes, so all these three stocks are in focus today mainly. Biocon, firstly, positive news flow. They are expanding their oncology portfolio in the United States. US FDA has given an approval for one of its biosimilars, bevacizumab, which was an important one for the company. Now, this has a market size of around $2 billion in 2023. So an important biosimilar launch that could come in for the company soon. Phillip Capital has spoken about an incremental sales of around $63 million coming in for FY26 from this biosimilar and $88 million benefit in FY27 for the company. Now, Sun Pharma, again, a positive news flow coming in here. The preliminary injunction on its Lexelvi drug has been lifted. There was a court case that was going on for a while with the innovator. Now, the US FDA, the US Court of Appeals and Federal Circuit has lifted this injunction so the company can launch this product now. Now, when is the launch time? That is something that has to still be decided by the company, but a big positive that comes in for Sun Pharma, and because this is a margin accretive side of a drug for the company, peak sales could be in the range of around somewhere $400 to $500 million for Sun Pharma at one point of time, and that is a word coming in from UBS. Lastly, Cipla, that also is seeing a positive news flow coming in. US FDA approval for their generic drug, that is Abraxane, is what they've received the approval for. It's a drug which treats breast cancer as well as other different kinds of cancers as well. And this drug was expecting an approval of around somewhere in second half of FY26. It's come sooner than expected. So some bit of a benefit on that front is what one is watching out for. Elara is saying that everyone has already penciled in the $20 million US dollars coming in for this drug in FY26. But going forward, also a lot of potential that comes in for Cipla on this front, and that is why I'm positive.
Good analysis, Vinny, and good on the pronunciations as well. Thanks a lot for joining and giving us that piece. Prakash, what do you like from the pharma pack?
So, Nigel, I'll tell you what. There's one, within this whole cloud of uncertainty, there's one particular thing that's very certain, and that's services from India are not likely to get, tariffs imposed. The government, the US administration is very clear. It's a goods part that they are very worried about. So services, if they will continue to be, absolved of this tariff burden, there's one company in the pharma space which is extremely positive, and that's Indigene. Global footprint, amazing work that they've done in terms of, advising pharma companies in terms of what they should be expecting in terms of cycles on launch and, commercialization and all of that. They use a lot of, data mining to do that. It's a platform which is kind of unique. So Indigene is the one that I'm talking about. If I were to play the pharma card this time around, instead of betting on players which are slightly more individually driven on operations, on production, and on products, here's one company that's primarily into services and something that you can't live without. And when the global supply chain is reset, there will be a lot of demand for these inputs from specialized companies like this. So, and look at where it is from its 52-week high or all-time high or whatever. It's really not lost too much ground given the fact that there is so much salience, and it's available at a fairly decent price as compared to what it used to be. The only thing is you could see valuations to be a bit stretched. That's because the earnings are yet to catch up. And once I think March numbers are done, you'll probably have a little bit of a comfort coming there as well. But I'm quite positive on this thing.
Indigene being an example. Okay. Prakash, in light of what we were just discussing on PI Industries, market now looking out for export opportunities. I mean, exporters who could stand to benefit. So chemicals we've discussed. In this electronics manufacturing space, would you pick any stock right now from a Dixon, Amber, that entire universe?
The likes of Dixon and Amber are probably benefiting because they are more inward looking. And then, whatever they supply ends up kind of getting assembled and sold out. The iPhone China-US access is something which probably brought a lot of attention to these companies. Again, they were in the spotlight. But I wouldn't bet too much on it yet till the dust settles, for the simple reason that it's going to be very specific on products and segments which they're competing with. Now, most of the players who are looking at EMS for the India market probably will continue to grow unaffected. But there's no need to kind of start getting very optimistic that Sirma will start getting to supply too much to the US. As a matter of contribution, it's really not very significant for most of these players, for the US buyers to kind of take cognizance. PI industry was very different. This thing, it's almost 80% plus exports and some very critical products. Here, I don't think the criticality is yet in their favor. So I would wait for it. It could work out favorably, so you're right. But do you want to do it on Friday or do you want to wait for Tuesday? There's a lot that's happening these days over the weekends. And I would give it that benefit of doubt in terms of waiting for it.
Oh, got it. I mean, take your point because with stocks like PI, maybe you have straight evidence. I mean, they're already geared towards the US. They already export to the US. For these other companies, they've been more domestic oriented, or maybe exporting to other ASEAN regions or Asian regions. Not directly right now. I mean, the US is not a direct part of their export revenue, at least right now. So take your point on that. Though, of course, the stocks today are having a great run. All of them, Sirma, Dixon, Amber, all those stocks up and about, guys.
Prakash, wanted to get your thoughts on Aurionpro. Is that a company that you've looked at? It's a product company. It largely has banking software products. It also caters to data centers. And it's quite insulated from the global heat because 60% of its revenues comes from India. It's been growing very well under the CEO, Ashish. I think 30-35% has been the annual run rate for the last 2 or 3 years. Steady margins between 20-22%. And it's been periodically making acquisitions. Even today, they've made a small acquisition. I think they're spending about 23 crore rupees. But is this a company you've analyzed? Because stock is off 50% from its 52-week highs.
No, absolutely, Rima. This is in a great spot. Optically, all looks very much in favor of this thing. They started off with simple ATM machine, softwares in India long back, and then they've kind of evolved themselves into a decent play. The only thing is that a lot of the acquisition in the recent past are yet to be digested and start reflecting in a way which is very accretive to either revenue or to margins. So I think the street is also willing to wait for that kind of a time. Once that happens, your EBITDA margins go beyond this 20% band that probably they've been around for a long time. And I do understand there's a lot of salience around it. It's just that things have been promised and they've been taking much longer. So once that happens, and the market today is in a mood where you only reward something which is visible, which is seen, which is post facto rather than what is anticipated. So I would give it some time, but yes, it's definitely something which stands out. Niche player, but has a promise. People are not yet looking at very small niches at this point in time. It's only when the big money starts coming from the FIs that, and there is a lot of retail participation, you'll see some of these stocks get back into their mojo. But otherwise, you'll have to wait.
Okay. All right, Prakash. We will leave it on that note for this afternoon. Have a good, restful, long weekend so we can be ready for all the action and the roller coaster come Tuesday. Thanks for joining in today. Well, with that, we have to take a very quick break. Come back on the other side, and we will be in conversation with Tushar Pradhan of Hexagon Partners to get some more perspective.
Okay, welcome back. 400 points, 22,800 plus is where we are trading at this point in time. So, I mean, it's looking pretty good out there. You know, what we'll do is just quickly play out, a soundbite from our conversation with TCS earlier. Numbers were kind of muted, but the commentary was okay. Given the environment, etc., the management said they've not seen any deal cancellations per se, maybe a little bit of delays, ramp downs as they called it. So listen in and we'll come back with Tushar Pradhan.
Have I seen any major budget cuts? I have not seen any major budget cuts. I have not seen any major project cancellations. There are some tactical ramp downs here and there, but I won't panic at this time. Many of our customers are also in a wait and watch mode in terms of what is the end game going to be. But good thing is, whatever we are seeing so far, as much as the rhetoric, we have not seen our customers panic. Like there are maybe some programs what we thought that they would kick off, but some delays in decision making. But we are not seeing any major cancellations or no major project ramp downs. Like there are few, but no major. So I don't think there is any major negative reaction
so far. At least that's essentially the managed commentary coming from TCS. Stocks not reacting. With the stuff which is up today, LTI Mindtree is up 3.5%, Persistent is up 3%, Emphasis is up about 2%. But TCS, Infi, TechM, HCL Tech, Wipro, I mean, some are up, but up small. Tushar Pradhan is with us, director at Hexagon Partners. Tushar, good to have you with us here. Let's just start with this IT space. I mean, actually, if you look at the IT index, it's down 25% from the beginning of this year. What are your thoughts, Tushar, and anything you like here?
I think the reason why most of them are down clearly is because of an indirect impact of the tariff. So people are expecting that the US might go in a recession because of the challenges faced by the tariff regime, and as a result of which, US companies will be then constrained in terms of their IT budgets, etc., and that is actually been seeing having an impact on the stock prices. But I think that is maybe a second or third level impact that we need not be excited about at this time. And I think it is very necessary to kind of keep a close focus on the actual number rather than the sentiment here. Having said that, I think you have to remember that pre-COVID, most of these companies were trading at multiples which were much less than what the multiples even now are after a slight correction in most of their prices, which tells you that in a more benign environment, IT companies had come down to a level which was more or less a par for the course kind of year-over-year dollar revenue growth rate. And because of the COVID impact, the base impact took the revenue and the earnings growth significantly higher for the last 2 years. But if you're going now forward, I think we should be ready for a much more, I would say, muted multiple for these companies going forward. Again, nothing wrong in terms of the business model, etc. But I think the base impact is behind us. So I think the prices may adjust downward to a much more average multiple going forward. As a result of which, I think the only excitement I see in this place is about more specific areas of growth where the continuation of the earnings growth can be significant. But the larger, more diversified IT players may be more in for a more benign time from here on.
So do you have IT in your portfolio at all, Tushar?
Yes, we do. And as I said, it is more to do with the smaller, more, I would say, focused IT offerings, which we like, as opposed to, the more generic IT space as such.
So what are they focused on? If you could just give us some indication. Are they the ER&D plays focused on auto? Are they some of the mid-cap IT companies which are growing much fast, but they have a discretionary exposure? What are the companies that excite you right now?
So we, at the moment, are excited about auto in specific. So what we understand is that increasingly the value for any automobile going forward is going to be more in the electronics than in the machine. As we all know, Anyway, the ICE is going to be replaced by an EV. But more importantly, it's the gadgetry, which is really the critical aspect for a differentiation between one automobile versus the other. And I think anything which services this area, whichever way you look at it, is going to be of interest. And the percentage increase in the value for the automotive going forward clearly will come from here. So any company servicing that area, that's a principal interest. There are other interesting companies which go into a lot more specific area of travel, etc., which also are fairly interesting, but we don't hold them as of now.
You were also looking to add Select Pharma when we last spoke to you. Where do you stand? I mean, have you already added to your positions in pharma? Is it the CDMO space? How are you thinking about pharma right now?
Pharma is in a fairly interesting space, I must say, because of the whole, expected level of new tariffs to be added from here on. But having said that, I think Indian pharma continues to remain in a very strong space. There are companies which we like in the CDMO. There are companies which we like in the generic pharma space, because that will continue to remain one of the bright spots going forward, no matter where US healthcare costs go. Because whichever way you look at it, I think the direct impact of tariffs would be on customers who pay for healthcare going forward. And I think there will be extra care to ensure that the medical costs, which already are fairly high in the US, do not shoot up due to pharmaceutical costs. We all, of course, agree that the pharmaceutical cost is a smaller component of the total healthcare cost for anyone anywhere in the world, especially in the US. But that will still be a relatively bigger impact for consumers. So I think this is a fairly protected space from what I gather, and that's why I feel continued to be excited about the Indian pharma space. But as I said, nothing specific at this time. There are areas in generic pharma and the CDMO space which are very attractive to me right now.
Tushar, hi. Good to be listening into you this afternoon. So just a question on the broader market. I mean, for a moment, if we just let go of the global tariff headlines, and for a moment, if you assume that the worst of the financial market damage maybe is over, the crazy volatility, 6-7% swings on a daily basis, if we leave that aside and focus on the rest of the cues here, which is whether it's flows, whether it's the earnings recovery, then how much would you give this market over a 12-month horizon? I mean, will we get back to our winning ways, or do you see a prolonged patch of consolidation ahead?
Yeah, so I think I clearly want to distinguish between markets and the earnings growth, because over the long run, we all know that the markets do follow earnings growth. But in the interim, even if you have strong and robust earnings growth, which we clearly expect in FY26 as well as 27 especially, if the sentiment is blurred by either an ongoing trade war which takes longer to resolve, or actual impact on the economies leading to recession in the US, for example, then your domestic earnings growth is not going to actually get the limelight. When I call limelight, I mean the multiple it deserves. So earnings growth may roll in. Economic growth can be shown in various parameters. You will see IIP growth continue to be very strong. However, the markets may not want to respond because of the sentiment being bad. So I think this is really where I draw the line in terms of the estimate for what we think the market is likely to do. But if you ask me what is the prospect of earnings going forward, I think the domestic economy continues to remain a bright spot. If you look at all of the things which have happened in our economy lately, and the possibility of continued investment into production and maximization of capacity utilization from here on, with the kind of demographics that we continue to have, I think the Indian economy is going to be a bright spot for a long time. Having said that, if international capital starts to identify that and would want to participate in the markets, I think that will be the kind of silver lining that we would like to see for the case that we have to make. So if you were to ask me, are earnings going to remain robust? I would think so. Would you think the market would react to that? That's a matter for global news at that time for us to kind of take a look at.
All right, Tushar, thank you very much for joining us. It's a pleasure having you with us here on CNBC TV18, and look forward to our next one. Have a good weekend. I think we all need it. Let's take a quick commercial break here. We're going to come back with a quick check on what's happening in dealing rooms. D Street Chatter comes up with Nimesh in just a bit.
Welcome back. Well, the markets continue to hold with good gains. One stock that's moved high in the last few minutes is Varun Beverages. Good uptick is what we're seeing on that one. Credit Axis Grameen as well. That's the other stock that's spiked up. And India Cements, after seeing a sharp pullback, that as well has seen a bit of an up move. But Nimesh is with us. It's 3 p.m. Nimesh, what are you picking up? How are the flows? I mean, fair to say that India has actually outperformed. It's been a pretty good week going by all the volatility, all the cues that we've been getting.
So again, Nigel, a good day. Actually, it's holding up to the early morning gain, which is a positive sign. Again, a lot of the beaten down sectors, which gets impacted because of the tariffs, that's in a big pullback. Having said that, the flows are very negative. That's overall feedback. So looks like the rally is largely driven by short covering, and some of the sectors which are so heavily beaten down, they're seeing a bit of a pullback. So need to see how things pan out in the global markets as well. I guess that will be very interesting to watch out for. Selling is happening in banks, OMCs, and real estate. So these are the three sectors which stands out today in terms of supply from larger institutions. Metal, a bit of short covering as well, and also because of the dollar index cooling off, are seeing a bit of a pullback rally. So as I said, metals, commodities, all those sectors which are so beaten down and has a bit of a positive impact because of tariffs, they've seen a bit of a pullback today. On the upside, 23,800 is a level to watch because that's a big resistance, so to speak. But frankly, again, we are heading into a truncated week. Next week, we have 2 holidays, Monday and Friday.
Yeah.
So not much to read into today's pullback, but from a flow perspective, there is selling from larger FIs.
Negative flows, then that's something you'll watch out for. So it appears the shorts getting squeezed, at least for today's session. What about individual stocks? What are you picking up?
Well, so in terms of individual names, the first couple of stocks is NHPC and SJV, and not much reacting today, but in general, there is a sense that both these companies are likely to back very large orders very soon. So that's a trigger in those names. Second stock is Max Healthcare, in a bit under pressure today, but there is a buzz of a large block deal coming soon in Max Healthcare. So that's the buzz to track there. The third name is Tata Consumers. We've seen a bit of rally in the consumer staple names in the last few days, and again in today's trade, Tata Consumers stands out largely on back of FI flows. So expect high delivery volumes and a bit of FI buying has resumed, is what I understand, in Tata Consumers. And the last is DB Realty, a big move in that name as well. It looks like the HNF flows are quite strong today, and there is a buzz of some corporate development. So remember, the demerger of the hotel business is still pending, so that's likely to come. And also they might announce a joint development very soon, so that's a trigger as far as DB Realty is concerned.
Nimesh, Morgan Stanley has also come out with a note, positive on consumer staples, and consumer has been one pocket of strength today. In fact, this entire week, safe haven buying. Tell us more about this report.
Well, Brima, as you rightly pointed out, there has been an upgrade on a couple of names within the consumer basket from Morgan Stanley today. But surprisingly, GCPL, which has been the big upgrade from Morgan Stanley, that's relatively under pressure today. But having said that, they've upgraded two stocks, which is GCPL. Morgan has upgraded the stock to an overweight now, and they've raised a target price there. And also, they've upgraded Hindustan Lever to an equal weight from underweight earlier, and they've raised a target price on both those names. The trigger or the rationale for upgrading both the stocks is, A, they expect strong earnings growth and also recovery in the margins going ahead for both these names. So that's the key trigger for the upgrade. On the other side, the one stock that they've downgraded in the consumer staple, that is Dabur. And Morgan Stanley believes that for Dabur, while earnings have been weak, there has to be a business reset as far as Dabur is concerned for them to outperform from here. So that's the rationale for them to downgrade Dabur. And for overall for the sector, Morgan Stanley believes that in this global environment, consumer names will be seen as a bit of a defensive play, and they may relatively outperform in such environment. Having said that, they very clearly believe that it's going to be very stock specific and not a broad-based rally for the consumer names. So hence, two upgrades, which is GCPL and Hindustan Lever, and a downgrade on Dabur.
Okay, all right, got that. Thanks very much, Nimesh, for all the buzz and the chatter. With that, let's get back to the market. The market's been holding nice and steady. It's going into the weekend on a high with a flourish, 420 points up on the Nifty. Mitesh is back with us for some final thoughts and calls. Mitesh, final advice, index and stocks.
Yeah. I think, on the index, the good thing is that highlighting this at 22,800 seems to be captured on the closing basis. So that gives you some kind of a long bias. PNB Housing Finance is on BTST. Disclaimer, we had some positions which we booked in the morning because we were not sure to clear the earlier high of 970, but it's done that. So there was interest, but we are out of it. But the stock chart is still good. BTST here is stop at 974. And look for a target of around 995 to about 1,000 for tomorrow. And Poonawalla Finance is another BTST call with a stop at about 363 for targets of 372.
Just keep an eye out on the bottom of your screen. Actually, Concord, they have come out with an update and they have missed their FY25 guidance, and they've missed it by quite a large deal. The ticker team is putting it down for you on the screen, so just keep an eye out on that. The total volume growth has come in only at around 8%. At the start of the year, they were talking about 18 to 20%. EXIM volume growth is little south of 7%. Earlier, they were talking about close to the guidance given is 15%. So they've just achieved, half of that. And even the domestic volumes up by only around 12%. The guidance was 25%. So Concord, the volume miss actually has been quite large in comparison to the guidance that they've given, as our ticker team is pointing out at the bottom of your screen. The stock is pulled back from the top, but this is quite a sizable miss on all the parameters, total, EXIM, as well as domestic volumes. So just thought I'll point that out. But tire stocks, they're in focus. CLSA has come out with a note. Sudarshan joins in to tell us more on that front. Sudarshan?
So all the tire stocks are buzzing in trade after CLSA has initiated coverage on all the three major stocks, Apollo Tyres, CEAT and MRF, and it has outperformed call on all the stocks. And for Apollo Tyres, target is 566. For CEAT, it's 3,493. And for MRF, it's almost rupees 1.29 lakh shares. And if you look at the target price, it's implying an upside. That's the maximum for Apollo Tyres. That's more than 30%. For CEAT also, it's almost 30%. And what's the reasoning behind this initiation with outperform call? It says the sector is undergoing a structural improvement, especially in terms of profitability. And also, this mix is going to improve via increasing share of higher margin tires. And currently, the margin is at the bottom of the cycle. And now with input cost coming down in the last few months, input costs have fallen sharply, and that's going to help gross margin, which is likely to improve over the next few quarters. Also, it believes that valuations are going to improve considering all the factors over FY26-27, and that's the reason CLSA is positive on tire sector.
Got that. Thank you very much for that. Sudeep Bandyopadhyay, Group Chairman of Indie Trade Capital, now with us. Sudeep, do you have a view on tire companies? Do you think margins are set for improvement?
Oh, absolutely. I think, the raw material prices have come down and that definitely helps the margin. So There's absolutely no doubt. Now, there is a lot of confusion over this tariff war and what will be the consequences of this, whether there will be an indirect negative impact, whether the Chinese dumping will increase. These are the things which we need to carefully examine. But fundamentally, leave aside the tariff part, structurally the business is in for good time because of the margin improvement possibility, strong margin improvement possibility.
Okay, all right. Sudeep, that's a sense on some of these tire names. On financials, Sudeep, now the policy is behind us. We know the stance has changed and there's ample liquidity in the market, probably more rate cuts coming. How would you play financials beyond the large blue chip bank names?
I think a couple of things, Survi. I think, we have seen a bit of meltdown in the gold loan companies. The new regulations which are being proposed are on the lines of what is in existence for the banks. And, NBFCs were working on a bit of a lenient mode. That will not be there in the future. That's the assumption. And that's why I think all the gold loan companies have taken a hit in our past few days post the policy announcement. But I think structurally, it's a good thing to have happened. And at current level, after the correction, I think, it's a good time to buy the gold loan companies. If you're looking at a kind of a 1 year kind of a time horizon, the world is going to remain volatile. The gold prices will have an upward bias. Gold loan company regulations have by and large stabilized. And with this latest round of RBI policy announcement, I think we should be in for a stable regulatory regime in the gold loan space for quite some time. Now, with that understanding, I think, Muthoot and Manappuram both at current level does look good. Apart from gold loan, I think if one looks at the overall BFSI space, I continue to like the insurance space, and LIC continues to remain my favorite stock amongst the life insurance companies, sheerly based on the potential as well as the opportunity which is emerging on the healthcare space where LIC is supposed to be entering in a big way. Also, the bank assurance being questioned and some regulation on those lines being expected. I think LIC has the least amount of bank assurance presence, so indirectly the benefit there as well. Valuation-wise also it looks attractive. So LIC from the life insurance pack does look attractive.
Okay, all right. Sudeep, I wanted to ask your view on Tata Steel. Out of nowhere, they came out with the announcement on Wednesday. And they had a call as well. And what they mentioned basically is they're looking at making the Tata Steel Netherlands operations very, very cost effective. And they're looking at increasing profitability out there. So just give our viewers a brief outlook out there. They're saying in the next 2 years, as FY26, the second half, and FY27, they're looking at savings of 500 to around 550 million euros. That's a large deal that they're talking about. On the cost base, it could be close to around 15% or thereabouts, which is quite large. Investec, they say that these cost savings could result in a saving of close to around $80 per ton. So that's quite a large number. How do they achieve this? They're going to be pulling down employees by close to around 1,600 employees on a total base of around 12,000. So employee cost cutting will constitute close to around a third of this 550 million, which tells you it's around 160 to around 170 million dollars. The remainder of the factors would be operational efficiency, volumes, value enhancement, the blast furnace enhancement, and high utilization of pellets as well. Besides talking about the Netherlands operations, they also said that, the US tariff impact will have a minimum direct impact on them. And the second factor they said is that the European operations, which have been under pressure, they'll turn cash positive in the second quarter of this fiscal. Heartening to hear on both those two factors. So put this together, there's good news coming in that the Netherlands operations will turn up the profitability in the next couple of years, and also a clarification on the US tariffs as well as Europe is in a better space. And that's why you have brokerages like Phillip Capital. They're quite positive about that. The EBITDA per ton for Netherlands was only around $40 to around $60 per ton, what they were working with. Now this will save another $80 or thereabout, $70 to $80. So that's an uptake out there. And Investec, they have upgraded the stock to hold because they say that this is positive. Tata Steel Netherlands business can do nearly around $100 per ton. And also they're saying that always the fear for Tata Steel is the Indian operations will have to support Europe. With this cost-cutting measures, that goes out of the window as well. So that's why Investec relatively more positive. Sudeep, at around 130, how do you think Tata Steel behaves from here on? Because it's seen a correction from, I think, 185 or thereabouts the world is in a flux. Otherwise, these moves are quite positive. Your take?
Absolutely right, Nigel. I think I've been positive on Tata Steel for the last about almost a month. I think very clearly, much before all these cuts were announced and cost savings were announced, I think the demand for their product is increasing significantly in Europe. With the rearmament of Europe being a reality, I definitely expect significant demand for steel going up in Europe. And with that, I think the biggest problem as far as Tata Steel Europe was concerned was a demand point of view, the volume pickup. Now that's definitely going to happen. And they're also acknowledging the fact that very soon the volume pickup will ensure that they become, they turn profitable, EBITDA positive, and going forward, they will become profitable as well. Now, overall consolidated Tata Steel, the drag was the Tata Steel Europe operations. And with that drag, once it goes away, because they are becoming operationally profitable as well, I think things should start looking good significantly. Now, with these new steps announced, with the cost cutting and focusing on efficiency, I think this will be the icing on the cake. I think definitely this does look very good, and they're absolutely right. This tariff war with US will have negligible impact on Tata Steel Europe as well as, of course, Tata Steel India. So I think in this stormy market conditions and trade environment, Tata Steel is one place where one can definitely look for shelter.
Okay, Sudeep, do stay on. Need to slip into a very short break. By the way, Europe is firmly in the red. It's down more than 1%, so it's swinging back to losses, the key indices there. So there's still a lot of concern surrounding whether the US will tip into a recession. What will happen to trade? Listen in to excerpts on that note from our conversation with Jahangir Aziz from JP Morgan.
So after the pause, we are still sticking with that, second half of the U.S. will go into recession. That was a baseline prior to the pause. That remains a baseline. For global recession, we still don't have it in a baseline, but we have a 60% probability. We haven't changed that probability. U.S.-China trade will virtually freeze. I mean, unless you critically need something, you are not going to participate in any transaction between US and China. Most of the trade that India does outside of US and China is also related to the supply chain that goes through US and China. So if the trade between US and China comes to a halt, this is a actual shock to the global trading system. So if global trade is under attack and global trade actually stumbles in the next 2, 3, 4 months before, let's say, we have a negotiated compromise, then I do not think that emerging markets growth gets spared.
Welcome back. Well, Sudeep is still with us. Sudeep, what about delivery? I recall when it listed, there was a lot of excitement on that counter. But from there, actually, it's been, downsliding. And over the last weekend, they went ahead and they made an interesting acquisition. It appeared quite, attractive at the valuation that they did it. The problem was that, in fact, the street believes that now they'll get back into losses and it'll take a bit of time to turn around that entity. Your view on the stock, because after rallying at the start of this week, it's actually given away everything up.
Nigel, you're right. I have been very positive on delivery for quite some time, and I strongly believe that this business has significant potential. Look, logistics is a very, very important, part of the entire, value chain, which all these e-commerce guys and every other form of commerce requires, and delivery plays a very important role there. Unfortunately, their operational performance hasn't been up to the mark, and that's pretty much the reason why the market has not given the kind of valuation which they would have probably, and we all thought this would attract. The acquisition, I don't, find really any problem with that. Yes, market didn't like it. Initially, it gave thumbs up, and subsequently, they didn't like the acquisition. But I think, leave aside the fact that to an extent dependence on Meesho increases, and Meesho themselves are setting up their own delivery platform and things like that. But I think, consolidation and strengthening their market position, I think is a good idea. The valuation was at a very attractive price. And, short term, yes, there will be pressure on profits and they may slip into a loss in the coming quarters because of this acquisition. But I still maintain my long-term positive view on delivery. And if somebody is willing to give it 1 year, I would still recommend buying at current level.
Okay. All right. Sudeep, stay on. We'll have some, final questions for you in just a bit. Let's play out a slice of some more market opinion that we've gathered today. We caught up with Devina Mehra of First Global, spoke with her about what she thinks of this whole tariff storm, whether the worst of it is over or not, and what should the expectations be from the market from here on.
India, in any case, even when the tariffs were imposed before the rollback, was relatively a little insulated, one, because we don't have that much external exposure, and two, on a relative basis, it was a possibility that you could actually be gainers because the tariffs were vis-a-vis the US and all your competitors had higher tariffs. But I mean, for the moment, that's on the pause button has been set on that. Whatever is your equity allocation, which should never be 100%, you should remain invested. But in a steadier portfolio, if you had invested in the themes of 2024 or were overexposed to small and micro caps, you have to recalibrate. So don't try to make it up from the same stocks or the same strategy or the same scheme. Broadly, I would still say remain invested because the risk of a crash for the large cap steady state is not very high, which is not to say there's absolutely cannot be any downside in the indexes from here, but the risk reward is in your favor. And US has been outperforming for about 12 years. So anyway, I'd been watching that sometime that outperformance would end. If you'd asked me 6 months ago, I would have said that, we are watching, but nothing looks imminent. But I think Trump has hastened the end of the US outperformance. And more than that, whatever US has done has hurt, I think, even on a long-term basis, the US dollar's position as the reserve currency of the world and the trade currency of the world. People will start to look at alternatives. 2 years ago, I had made a video saying de-dollarization will not happen in a hurry because reserve currencies don't change in a hurry. But I think Trump has shaken something fundamental about the trust in US.
All right, that was Devina Mehra. Sudeep, so coming down to final thoughts, you give us some ideas. I mean, actually, the market's recovered already quite a bit. For this week, we are down just about 0.5%. It's been quite good, all things put together. So maybe one or two more ideas?
Well, I do like power sector, Survi, and I've been talking about it for quite some time, and it's got nothing to do with all this tariff war and the confusion surrounding it. So, if you believe in the power sector, which I do, I think it's a great opportunity. So, you go ahead and buy NTPC for long term. Go ahead and buy the power financiers, PFC, REC, even IREDA for long term. Maybe you can look at some of the power ancillaries as well. There is a structural positive which is going to last for 5 to 10 years in the power sector in India. So there's absolutely no harm in going and buying these. The other segment is the engineering, construction, infrastructure. Now, the government of India is going to spend almost $1 lakh per month based on their capital expenditure budget. Now, a lot of this money will be flowing through these construction infrastructure companies. So maybe the leader in this pack, Larsen & Toubro, can be looked at. Maybe some of the other companies working in this segment can be looked at. Again, they don't get impacted directly or even indirectly because of this tariff war. So focus on these stocks, let the tariff things settle down, and then we can look at the exporters and others who are exposed to this tariff war.
Okay, all right, fair point, got it. Thank you very much, Sudeep, for taking us through what has been a turbulent week, to say the least. Test of nerves for investors in all markets, including, of course, our own. Thank you very much for joining in. Okay, we're down to the last 2 minutes, so let's wrap it up. What a good way to end the week, and hopefully this green is going to stay. That's what investors will really pray and hope for. Almost a 450-point rally on the Nifty as we are winding up, and we are closing very close to the highs of the session as well. So that's the Nifty heat map. It's a sea of green out there. And the biggest gainers include, of course, the metal stocks, metals, commodities, materials, Hindalco, Tata Steel, JSW Steel, Coal India. These stocks have surged between 4 and 6.5%. You can see them right on top. That is followed by names like Geo Financial Services, Grasim, looking good, NTPC, Supply. It's been everything goes up kind of a market, so to speak. The big boys, of course, are supporting and performing well. Reliance, for instance, has had a 3% move. So there's absolutely no fault you can find with that. L&T, 2% higher. HDFC Bank, 2.5% higher. Bajaj Finance, 2% up. So financials and banking have done well. Talk about some of the pharma names. They've had a decent run as well today. Sun Pharma, Dr. Reddy's, gains are between 2 to 3% on these stocks as well. Maybe the market is sensing that Donald Trump is just going to put the pause button even on fresh pharma tariffs, at least for now. Maybe nothing will come immediately. That's the hope. IT has been relatively the weaker link. TCS, let's pull up that stock. It is ending down about 0.25%, slightly off the lowest points of the day. But nonetheless, muted quarter and slightly cautious commentary, so 0.25% down there. Infosys also 1% higher. So comparatively speaking, the IT part of the market has been more subdued. Tech Mahindra, HCL Tech, these are stocks up about 1% each. The gains are coming in from commodities and they're coming in from financials. Let's talk about the mid-cap screen. The mid-cap screen is looking pretty good, 2%, almost 2% up on the mid-cap index, in line with the large-cap gainers. Let's talk about some of the key movers and shakers here. PI Industries, 10%. Wockhardt, 10%. Something like Sarda Energy, up about 10 to 11%. Look at the moves on Gravita. Gravita, by the time we've closed out, has surged 18%. And a bulk of this has happened in the last 20 to 30 odd minutes. Big move there on Gravita, about 18% on the higher side. Some of the EMS stocks like Syrma have had a very good run. Syrma is up about 10.5%. Pull up Dixon and maybe even Amber. Both of those stocks are also up between 5 to 6%. So that's been the shape of the market in general. Looking very, very good. Just have to point out one name. From the gold financier side, Muthoot has ended with a cut of about 6%. So about 6% yesterday as on Wednesday, and another 6% down today. That takes the weekly loss on Muthoot Finance to 14% after these new gold financing draft norms from the RBI. Well, the bell has gone, the week is over, and we have managed to end with a cut of less than 3% for the week on the Nifty. It's a wrap on this edition of Closing Bell. Thank you very much for watching, but do stay tuned because we have Editors Roundtable coming up next.